Hi, and welcome to another video on accounting. We are continuing our discussion of inventory costing methods. There are two inventory costing methods. FIFO, first in, first out, which we have discussed in a previous video. Do watch that video. And the second method is the weighted average method, which we are going to discuss in this video. I'll walk you through an example so that you understand why inventory costing methods are needed. Here's a point to consider. You can see this box. This box is very important for understanding why we need inventory costing methods. So on October 3rd, I purchased 5 staplers at $5 each, and I put them in this box. A couple of days later, I bought 5 more, but this time the price for the stapler was $6, and I put those in the box as well. A day later, I make sales. I sell 3. So calculating the revenue is very easy because 3 at $10 each will give me $30 of sales revenue. However, what is the cost of those 3 staplers? That is difficult to answer. Now, finding the cost of goods sold is and the remaining staplers in this box, what is the value of them, are the two questions that we need to answer. Now, two things make it difficult to answer what is the cost of those 3 staplers that I sold. So when a customer came in to purchase these 3, I picked them up from this box. So now the question is, did I pick up $5 staplers or $6 staplers to give to the customer? I don't know. Two things make it hard to answer this question. Number one, because all staplers are identical, the same. So when I was picking up, I didn't know I was picking up $6 ones or $5 ones. The second thing that makes it difficult is that these staplers are at different costs. Some are at 5, some are at 6. If the staplers were all at $5, then if I picked up those 3, I already knew that the cost of sale is 15. That is 3 at $5. But since the costs are different, that makes it difficult to answer the question what is cost of goods sold and what is the remaining staplers in the box ending inventory, the value of that. Let's continue with the example. So I bought some more, 3 more, and put them in this box also. And a couple of days later, I make some sales, 4 of them. Now calculating the revenue is very simple. 4 at 10 is 40. But again, I have to answer the question, what is the cost of the staplers that I sold? So when I picked up those 4 from the box, did I pick up $5, $6, or $6.10 staplers? Now, hard to answer that question again because of two things. All staplers are identical and the cost of those staplers are different. So I don't know whether I picked up $5, $6, or $6.10. And I don't know that the remaining staplers in the box, what is the value of that? Are they $5, $6, or $6.10? Now these two things are make it difficult to answer those questions, but we need to understand what is the cost of those 4 staplers that we sold. And similarly, we need to know what the staplers in the box, the remaining ones, what is the value. To answer those two questions, we need a method. First method is first in, first out, FIFO, which we discussed in the previous video, so do watch that. And today's video, we are going to talk about weighted average. So how does weighted average work? Now, unlike FIFO, weighted average does not take the physical flow of inventory into account. FIFO thinks that when I picked up those 3 staplers from the box, I was picking up the $5 staplers because it keeps track of the physical flow. Because what is the physical flow in the box? The first that came into the box were $5 staplers. So when I sold them, I picked them up, I was picking up the $5 ones. Weighted average does not look at that. It, however, just calculates an average cost and then uses that cost to determine the cost of goods sold and the ending inventory value. Now, how does it work? How do we find out the average cost? Here's a formula. So you find out the cost of all your purchases and divide that by the total units that are available for sale. This will give you an average cost. That cost then can be used to answer the question, what is the cost of goods sold and what is the ending inventory? So to find the answer to the cost of goods sold, all I need to do is take the quantity I sold, the number of staplers that I sold, say 3, and multiply that by the average cost that I just calculated. That will give me the cost of goods sold. Similarly, to find the ending inventory, all I need to do find out how much is the quantity unsold and multiply by that by the weighted average. So I need to know how many staplers are still left in that box and just multiply that by the weighted average cost. This weighted average cost must always be calculated after every purchase so that you have the average cost to already there to find out the cost of goods sold value and the ending inventory value. Let's go back to that same example of the staplers to answer the question. So when I put in the first purchase here, I put in the second purchase here, and I make a sale of 3. Calculating the revenue is simple, that's $30. But what is the cost of goods sold? Well, I need to calculate an average cost. So I need to find out first what is the total cost of my purchases. I bought 5 at $5, that's 25. I bought another 5 at $6, so that's 30. Now add those up, that will give us the total cost of my purchases. And divide that by the total units, that is 10. This will give me an average cost of $5.50. Now I use this $5.50 to find out the cost of goods sold. So how many did we sell? 3. 3 at $5.50 is $16.50. And how many are still remaining in the box? 7, because we had a total of 10. That at $5.50 will give us $38.50 as the value of ending inventory. So now I can answer those questions. Now the cost of goods sold is $16.50. Minusing that from the revenue gives me a gross profit of $13.50. And the remaining stapler value in the box are $38.50. Let's continue this example. So I put in the next purchase there. Again, I sold. Calculating the sales revenue is simple. That's 4 at 10, $40. But again, I need to know what is the cost of goods sold. So you already know that before this last purchase, we had 10 purchases and 3 were sold. So 7 are still there. Now those 7 will be costed at the previous average cost, which is $5.50. And now the new 3 staplers were purchased at $6.10. Add that cost, that is the total cost of goods available for sale. Divide that by how many units are available, 7 from the previous before this purchase and 3 these purchases, that's 10. This gives us an average cost of $5.68. So now ask ourselves, how many staplers did we sell? 4. So 4 at $5.68 is $22.72. How many are still left in the box? Ending inventory, that's 6. $6 staplers at $5.68 will give us $34.08. So the answer to the question, what is the cost of goods sold? $22.72. Subtracting that from the revenue gives us a gross profit of $17.28, and the value of ending inventory is $34.08. Now, let's look at an example how it's done in real life. So here is 2 tables. The first table is the purchases and the second table is the sales. So on first table on August 1st, 3rd and 17, we purchased 10, 15, 20. The unit cost per item was 91, 106, 115, giving us a total cost for each line for each purchase as at 910, 1,590, 2,300 dollars. So the total units we purchase is 45 at a total cost of 4,800. In the second table, we made sales on August 14. We sold 20 at $133. That's the sales price. That gives us revenue of 2,660. And on the August 28, 14 were sold at a price of $150, giving us $2,100 revenue. So we sold 34 units for and sales revenue is 4,760. But we need to find out what is the cost of those 34 units so that we can deduct it from the sales revenue to give us the gross profit. So let's look at how we do that. The first thing is that you need to set up a schedule, which we call inventory schedule. Again, it's similar to the one that we discussed in the FIFO method. You have a date column, a purchased column, cost of goods sold column, and balance column. Each of these three columns are subdivided into unit cost in total. So we need to fill this table from the question and find out the unit cost along the way as well. So all purchases happen in August. I'm going to put the date as August. So our first purchase was 10 units at $91, so 910. Now remember, every time I update the purchases or the cost of goods sold, I need to update the balance. So I wrote this in the, I filled in the purchases line first, so I'm going to move that to the balance. Since I bought 10, so I'll put 10 in the units. Now, I told you that we need to calculate an average cost after every purchase. So since this is our first purchase, the average cost will be $91. So we'll put 91 at 910. Let's fill in the second line. Again, on August 3rd, we purchased some more. In fact, 15 more. The cost went up to 106. So 1590 was the total cost. So I'm going to move this into the balance side. So since I already have 10 units in the balance, and I will add 15, the new purchase to that, giving me 25 total units. And now I need to calculate the unit cost. So how do we calculate the unit cost? My first purchase plus my new purchase divided by the 25 units that are there. So my first purchase was at 10 units at $91, giving us 910. In the second purchase, I already know the total cost, 1,590. I will divide that by, we've had 10 already, and 15 new units, giving us 25 units. So the average cost is going to be $100. We are going to put that there. So 25 units at $100 will be $2,500. Now comes the sales. So we sold 20 items. Now all those 20 items that we sold will be costed from the at $100. So 20 at $100 will be 2,000. Now this will give us so remaining inventory. Now we have to do the balancing. Since 25 were before the sale, we sold 20, giving us 5 at $100. That's $500 balance. Let's buy some more. So I bought more, 20 more at $115. That's 2,300. Now I will repeat the process. Since in the balance I already have 5, I bought 20 more. So the total units I have is 25. And now I need to find the average cost. So I told you we need to calculate an average cost every time we purchase. So what is the average cost? I need to find the total cost of my goods. Since I already know the balance is 5 and the total cost is 500 plus the new purchase 2,300 divided by the total units. 5 as a balance, 20 more we purchase, so give us 25 units. So when I take the total cost of goods available for sale divided by the units, it gives me $112 as an average cost. So all 25 units that I have will be costed at $112. So that will give us $2,800. And now we are going to make a sale. So on August 28 we sold 14. Now all those 14, the cost of goods sold per unit would be at $112. So 14 at 112 will give us $1,568 as cost of goods sold for those 14. Now that will leave us with 11 units still remaining. So 25 were before the sale. We sold 14, giving us 11 left in the balance at $112. So now we have we have filled this, taken the information from the question and filled it in. And time now to add the columns. So my total purchases are 45 units at 4,800. The cost of goods sold will be 35 units I sold, and the cost of those is $3,568. Now in the balance, the remaining inventory is 11 units, so I'm just gonna copy the last line. 11 units at $112 will give me $1,232 as the remaining inventory. So to answer those questions, what is the cost of goods sold? That is $3,568. And what is the ending inventory value? $1,232. Now we have answered those questions using the weighted average method. Now, so to calculate the gross profit, so all we need to do is take the sales revenue from a question, which is 4,760, minus the cost of goods sold, 3,568, which we just found. This will give us a gross profit of $1,192. So this is how a weighted average works. You need to calculate a new average cost after every purchase. Now the last topic on this last thing on this topic is the effect of weighted average method in times of rising prices. So when prices are rising, what is the impact of weighted average on the balance sheet and on the income statement? So we use the weighted average to find the value of ending inventory, right? Now weighted average is going to give us lower inventory value. Now compare to FIFO. Now FIFO gives us higher inventory value because it considers the first purchases which are at a lower prices to be sold first, and the later purchases which are going to cost us more will be considered unsold, so higher inventory. Weighted average, however, calculates an average cost of the all lower price inventories and the higher price inventory items. So this will give us a lower inventory value compared to FIFO on the balance sheet. What about the cost of goods sold? So weighted average again gives us a higher cost of goods sold compared to FIFO. Since FIFO considers the first purchases to be sold first, and first purchases are at a lower price, so the cost of goods sold will be lower. However, weighted average, as you saw, calculates an average cost of the higher valued items and the lower valued items. So the cost of goods sold will be higher, therefore the profit will be lower. And those profits and cost of goods sold are both going to impact our income statement. Now, to illustrate this, let me compare FIFO with average. So the sales revenue and FIFO and average methods are the same, 4,760. Now the cost of goods sold under FIFO is $3,535. Compare that with the cost of goods sold under average method, which is $3,568, $33 more. So you can see that FIFO's lower cost of goods sold, therefore it will give you a higher gross profit of $1,225, and weighted average gives you a lower profit or gross profit of $1,192. Operating expenses are the same in both cases, 500, 500. The net profit under FIFO is $725, and the net profit under average is $692. So the impact on the income statement is higher cost of goods sold under weighted average and lower profits under weighted average compared to FIFO. And what is the impact on ending inventory? Well, FIFO reports current costs, which is the costs that are unsold, higher cost items, so $1,265, and under weighted average it will be $1,232. So lower inventory, ending inventory values will be reported on the balance sheet. Now, this was weighted average. Now, watch this video again, practice a few more examples, and hopefully you will understand this better. And I hope this video was helpful. And I want you to like the video, subscribe the video, and make sure you click the notification icon so that you become aware of our future videos. And I will see you in the next video.